Sure. I mean, we were the darling of the Australian stock market for a short period of time. I'm not sure that we've ever been the darling of the US internet industry. And the reality is LookSmart's never been a dominant player in the US market. But I think what's happened is that we got over-reliant on one partnership, namely our partnership with Microsoft. It represented over 70% of our revenue last year. It was a great partnership, and they were a great company to work with, but I think it tended to crowd out some of the other initiatives that we needed to be working on in order to generate long-term sustainable profitability. So I think the big story with LookSmart is a company that got hooked on one revenue stream, and when that came to an abrupt end, we've had to do a fair bit of work to rebuild the business.
Did the executive team not see it coming?
I think we were confident that we would retain some form of relationship with Microsoft. Now Microsoft, made decisions for their own reasons, and I'm not going to fault them for that. As I say, they were a great partner, and we'd love to work with them again. But I think we were hopeful that we would continue some form of relationship with them. Yes.
Yeah, because having a relationship with Microsoft is quite risky. They'll either steal your technology or your idea or buy you out.
I'm not sure that I'd characterise it that way, and certainly, look, to be honest, I mean, as a partner, they were great. We never had any particular dramas with them actually as a partner. They were very professional at all times. The risk, I guess, is not so much the issues that you've raised. The risk is that you get hooked on the revenue stream. It was a very profitable revenue stream. And a bunch of things flow from that. One of them is that you spend less time focused on your costs than you should be, and I think that we were guilty of that. But the other issue is that you get too focused on one partner and not focused enough on building up the rest of the network. And really that's been the big change in the company in the last 6 months, is that rather than being focused on the needs of one partner with all the risks that entails, we've been very focused on building out a network of dozens and hundreds eventually of partners, which is a lot safer, because if one of them changes their mind, it doesn't affect the rest of the network.
Exactly. Now the model in the US to Australia was quite different in terms of the way you actually generated revenue. Now you built a successful business here in Australia. Why wasn't that model replicated within the US?
Well, the model was the same, the distribution market was very different. And the model's the same everywhere we've done it, which is low hassle, pay-per-click advertising with a fairly high degree of human interaction from our staff side to optimise campaigns. What was radically different in Australia was the nature of the distribution market in early 2002, when neither Yahoo nor 9MSN in Australia had viable alternatives out there to provide their paid listings for them. So both Yahoo and 9MSN got very interested in paid listings at the start of 2002. We were frankly the only kid on the block at the time. If that had been the case in the US, then we would have evolved in a different direction. But by 2002, Overture had clearly built a fairly strong position in relation to Yahoo and MSN in the US, and Google had come along by then and launched its AdWords product during 2002. So you have to be a little bit pragmatic on these things. The distribution market has driven many of our decisions. It's probably driven more of our decisions than I'd like in the future. I mean, I'd like us to have a little more control over our own destiny in the future. But if circumstances had been different in the US, we might have ended up with partnerships very similar to those we had in Australia.
Mm-hmm. Now, with regards to the LookSmart brand, is there a reason why the organisation decided to go through purely distribution as opposed to building up the local, or at least the brand itself?
Look, I think the fundamental issue there was one of resources. We've faced the same question year in, year out for 6 or 7 years. It's expensive to build a brand. I think full credit to Google. I mean, Google has built a brand without much marketing, purely on the back of a great product, and full credit to them for doing that. But, we were in a situation where our product wasn't as good as Google's. We acknowledge that. It's getting better, but our search product was not, in our view, sufficient to carry the brand on its own, and therefore we would have been spending a lot of money chasing a relatively small market share in search. Now, don't get me wrong, if there are a way to get more users directly to our website and searching on our website, on looksmart.com, I'd love to have that. Everyone would love to have that. It's, by definition, it's more loyal traffic, it's cheaper traffic. Exactly. You don't share revenue on it. It's a more sustainable business model. So we'd love to have that. Having said that, we think that a distribution model where you have dozens or even hundreds of partners is a pretty sustainable model in and of itself, and we're not seeing signs that 20 or 30% of the market that doesn't belong to the major players. And the major players in the US, of course, being Google, Yahoo, MSN and AOL. There's still 20 to 30% of the market that doesn't belong to them. It doesn't belong to them either because people have other loyalties or because people use more than one search engine. And we're not seeing signs that that's consolidating. We think there's still a pretty sizable market out there. And so while I'd love to have more LookSmart.com traffic, I'll take the other traffic because I think it's pretty good quality. And if you get enough, or a wide enough spread of partners, it can be just as sustainable.
Mm-hmm. You mentioned earlier on about not building the brand because there's obviously capital that's tied up in building a brand. Mm-hmm. But wouldn't the same be said also when you sign up a distribution partner, i.e. you have to give a guaranteed share revenue with that partner?
Sure, but you tend to be a lot more confident about that than you are about the vagaries of marketing. I mean, I can be a lot more confident that if we've got a good product delivering quality traffic, quality keyword traffic, advertisers will pay for it. I can be a lot more confident about the revenue that will come from that than I can about $1 spent on marketing. It's just the awful reality of building a brand. It's much harder to predict the outcomes, whereas search marketing tends to pay off. I won't say it's easy to make money in search marketing because it's not. You've got to continue to do a good job for your customers and your partners. And I think the big challenge for the industry in a time of growth is to remain focused on what got us here, which is great value for customers. So I won't say it's easy, but I can promise you it's a damn sight easier to do that than it is to run a marketing campaign to build your brand, particularly in the US market where the costs of building a brand in the US are pretty prohibitive.
I can imagine. Now, talking about signing up those smaller brands and continuing your distribution strategy, wouldn't Overture also be taking that same approach, tying up those potential partners?
Look, to an extent. Having said that, now that they are owned by Yahoo, I think they're taking a slightly different tack. I think Overture as an independent company and Overture as a business unit of Yahoo are probably two different things. They've done incredibly well, all power to them, and they along with us, were the pioneer of paid listings. Both of us started selling paid listings 4 or 5 years ago in the US, and they've built a great business out of distribution partnerships. But now that they're owned by Yahoo, they tend to be pretty intensely focused on maximising the revenue out of the enormity of the Yahoo property, which is probably the right place for them to focus. There are a number of second and third tier distribution partners who don't seem to be as prominent on the radar screen for Overture as they are for us, and that's definitely where we're focused. It's not going to be as big a business as them. I'm not here to tell you that we're going to be bigger than Overture in 6 months, because we're not. But I am confident that there is a market out there of distribution partners who are happy to work with someone other than just Overture or Google.
Okay, and I can imagine also some of those companies that Overture would have approached in the past now, those companies won't welcome their approach because they're competitors, essentially.
Look, I think there's some of that going on. It's a little early to tell, but both Overture, Overture as a unit of Yahoo and Google clearly are formidable competitors for anyone in search. And there is an extent of people being concerned about companies playing both poacher and gamekeeper on these things. That's definitely the case. Little early to tell how big a deal that is, but we're certainly hearing a bit of that out there in the market, yes.
Great. With regards to the current position where LookSmart is now, Damian, why sell the business in Australia?
Well, look, in the context of the end of the Microsoft deal, we faced some fairly tough decisions about the business worldwide. It was clear to us that the business would go through a period of unprofitability as we reduced our costs and then built our revenue up again through a new distribution network of smaller partners. That requires a lot of management focus, and simply it was a management focused decision. We were just not able to give the Australian market and the Australian business the attention that it deserved to continue to grow. We built a good business in Australia. We were pretty happy with it, and we felt we had a good market position. But when you combine the end of the Microsoft deal plus Overture's entry to the market, now that they're owned by Yahoo, obviously they had a pretty simple market entry strategy. It just looked to us that it was not the right strategic move right now to stay in Australia.